What's going on, guys? Ben here. Welcome to this video. We're going to be talking about structure. We're not going to deep dive too much. I'm going to keep it pretty basic, but I just want to show you really, how I start to mark up my charts from a high level view, and we'll just do a little bit of a top-down analysis and just I'll throw a few value bombs in there just to help you guys understand market structure. So let's get started. We're on the monthly chart currently. I don't normally use the monthly chart that much. I will mark up support lines or potential support and resistance lines because you tend to get very, very strong rejections from these lines. So I always focus more over what's going on right now than what's going on in the past. You see a lot of people marking up trend lines from like frigging 3 years ago. Yes, they can be powerful, but I don't use them. On the monthly chart, I use these lines only. So we've got two potential strong trend lines here that if price reaches or taps into, and we have the confluence, we have some potential reversal zones there. However, we can't just use them as a single confirmation. So what I do is I like to determine the highs and lows. So we can see here that the monthly is on a downtrend. Why is it on a downtrend? So we had the previous lower high here, the broke structure right here, look. But then once price hit this level, price then dropped and broke the bullish low. The bullish low, and price ended up here, which created a new lower low. So then that was our new lower high, and this was our new lower low. So at this point, I would have just been trading inside this structure on lower time frames, and I'll dive into that later. However, now we can see price pulled back, and it gave us a, if we use the fib here, look, wrong way around, and sorry, very sorry about that. So price gave us a, let's go on the fib, A86, where are you, my friend? I use the fib as well with price, not with wicks. And the reason why, I've just found it more accurate with the way that I do things and the way that I trade. So we can see here, we had a 886 pullback, and if we zoomed right in, we could find some amazing entries on these pullbacks for continuation trades. But that's for another video. But we can see here, price pulled back to the 786 and 886 zones, which are high probable reversal continuation zones, and we'll go into that on different videos, and then continued to break the low. When we're in a trend, for example, if we're on an uptrend like this, we expect price to pull back and continue, pull back and continue, and then what we do, we wait for a lower high, and then we wait for a breaker structure for then looking for potential reversals, and we can go into Wyckoff and all this kind of stuff in different videos. But what you'll find is price action moves like this, and normally on a, say for example, a new bullish trend, you'll find the shorter the pullback, the stronger the trend. So for example, like if we use the fib here, this trend here, if we could just go from here to here, sorry, I don't know where I was going with that then. And we go, let's put the 382. 382 here, very powerful number. If we get lower time frame confirmation there, we can enter there expecting the highs to be broken on a bullish uptrend. So we could enter here, we would have a profit, we'd take most of our profit at these highs because we would get rejection zones, which I'll go into in a moment, and then price would continue. And then we would expect it to continue again to make a lower high. And how we know the trend is potentially slowing down is when we get deeper pullbacks. So you saw that was a 382, and then this one, for example, we're getting into 786 zone, etc., etc. So this, yes, if we get confirmation, we can buy with a trend continuation, and this works on every time frame, guys. The lower the time frame, though, the higher, well, not higher the risk, but the less pips you're going to get for your entries, if that makes sense. If you're doing this on the 1 minute time frame, you can expect 3 to 5 pips. You do it on the hourly time frame, you can expect 30, 40, 50, 100 pips. Any higher, you can expect a lot more. So as the trend, or a good indicator that the trend is slowing down, what you'll find is deeper pullbacks. And then if you see a deep pullback here, yes, we can buy, but we always take our profits, or most of our profits, you know, just before the previous highs, or at the reverse of the 786 level, for example. Let me just grab my charger 1 minute, guys. Just get back into the video. So yes, when you see a deeper pullback, then you've got to have a bias in your mind that yes, we're still on an uptrend, for example, and it's the same on a downtrend. However, because the pullback's deeper, the trend is potentially weakening. So we could only get a 786 pullback here. That's why we've got to have a profit-taking strategy, etc., etc. And if we only get a 786 pullback on the way up, and then we see price start to make lower highs, etc., etc., or mini double top, and then it starts to break in either direction and break the lows here, then we've potentially got a change in trend. And you can normally see this. There's lots of different patterns, etc. I'll go into on different videos, and you can actually see how price goes from buy to sell. It's absolutely crazy, or sell to buy. More buyers and sellers coming into market, etc., etc. But anyway, you can see here, price pulled back to the 886 and then continued to break the lows. And let's just zoom in really quickly on the hourly and see if we could find any potential entries really quickly at that 786 lines. Yeah, there's a few, but it would make the video too long. I just want to keep this video about structure. So back to the day, back to the weekly, sorry, monthly even. So now the zone that I'm looking to trade in, I don't care about anything else that's going on, is this zone here. So we've got the monthly low that will mark up ML, and then we've got the monthly high down. And you'll see me marking up my charts. If you've seen them, if you're in my groups, etc., etc., a trading view, you'll see that, you know, I use this all the time because it just helps me see and understand where structure is. And once I've marked them up, you can just leave them there and you can watch how price, you know, reacts at those levels, etc., etc. We've got an order block here. I can see that. So once price reaches this level, we've basically got a guaranteed rejection, probably multiple. If price, you know, rejects or decides to break through, whatever it does, we've got an almost guaranteed rejection there just because of the order block here, and I'll go into that now. So if we go down to the weekly, look at the strength of this institutional move, and we know it's an institutional move because it created an imbalance. So I'll go into imbalances again in a different video. So once price reaches this level, look at the reaction it had before, and this works again on every time frame. And we only use order blocks, sorry, again, while I'm on the topic, that break structure. This order block broke structure, so we know this order block has a lot of potential power, especially for entries. And this would be, obviously, this, for price to reach this order block, it would have to break the monthly high, etc., etc. But this is a really, really good potential reversal zone, and that is where price could potentially go. But you've got to remember, a month's a long time. So even though price may break the monthly high to get there, it will probably, if the downtrend continues, close below before the month is over, if that makes sense, on the lower time frames. That's why you use the wicks. So what we've got now on the weekly time frame, we can see the weekly broke the low here, but then this was the high, and then we can see price broke the highs here, and then we had a huge wick. So we can see here, look, because of the huge wick, we've got a lot of potential liquidity there. So if price ever comes back down to this level, again, it's pretty much guaranteed that you're going to get a very good bounce again. And it's normally news influenced when you see this on lower time frames, these big wicks like this. But it's always good. That's why I mark these levels up, because it's always good when price gets near these zones. You can see it literally changes trends, you know, a lot of the time. And if you can get in at the top of a trend, you can hold it for weeks, months, depending on what time frame you're on. So we can see here that the weekly time frame, guys, is on it's bullish. So we'll put the weekly low just so we know where price is, and we've got the weekly high, the current weekly high, which is on an uptrend, WHU. So why is the weekly bullish and the monthly bearish? So the weekly is bullish most probably because it needs to fill the space of the monthly downtrend, which the space looks like it's going to be this imbalance here, or potentially filling the order block. Because also what I've seen right now, I'll zoom onto the daily to make it easier, we have got a potential shark pattern. Now I only use harmonics to determine potential trend direction, and I only trade them with confluence. So if we go to the 886 here, this whole zone here is a very, very strong supply zone. And we've already got two confluences here, strong confluence events. So this is a good potential PRZ already. And obviously if we zoom in and I show you my other secrets that I'm not revealing in this video, I will show you how to find more confluences, you know, to confirm the bias, and then how to enter on the lower time frame on once price reaches there, etc., etc. But remember, this stuff works on every time frame. You know, you can go back test this stuff. You can do it on the hourly, the 10-minute charts, etc., etc., etc. The harmonics, as I say, and the like the support lines and stuff like this, they're a lot more powerful on the higher time frames. So that's one thing that you need to remember. Price does take longer to reach them, but when it does, it fucking bangs, and that is something that you need to remember. But again, what we've got here, look, we've got another tiny imbalance here, so we'll probably see a little bit of rejection there, but I'd want to see how a lower time frame reacts to that. So we've got a potential shark, and sharks give us an indicator of where price is heading. But once a harmonic is completed, say for example at the D point, with other confluences, you could take that trade, especially from a daily, with a lot of confidence, especially with lower time frame confirmation. And this is where, when you get more confidence, you can use higher lots and you can start making bigger money. The chances of this not rejecting and going through are a lot lower than it just bursting straight through, you know, based on what happened at a previous moment in time when price was there. Price was strong enough to take price here down over 1,000 pips, you know, so there's a lot of liquidity lying there. However, a shark pattern can also go to a 1.13 on the fib. So if we get the extension and we just do A to X back down to A, we can see that the fib extension, so if the shark decides to extend, comes very, very close, actually almost touching it, if we very, very close to our monthly support line. So if we go back to the daily, and the reason I'm using higher time frames is because the price action is less choppy and it's easier to understand. But remember, this stuff works on all time frames, guys. So weekly is currently bullish. We can expect price probably to continue. You can see here, look again, we've got another potentially strong order block here. So we can probably expect some rejection here again. And where the rejection will go to, I will explain on other videos, but it's normally to, say, for example, a previous support level. Just, it needs to build liquidity, and then what it will do once it's done that is it'll then break the highs and then potentially hit our D point. If it hits our D point, that's our zone where we're looking for our lower time frame entries, and we could take a pretty big entry off here because we get probably a pretty big rejection. But if price is staying bullish, if we've still got more buyers in the market, again, this is where the profit taking strategy is so essential. You know, we take profits early and we leave runners. If you don't know what that means, I will explain in the comments, or you can just join the free group and I explain it in there. But with the way that price is structured from the higher time frame going down, we can probably expect price to then break the highs if it stays bullish and actually complete the 1.13 on the crab, which also touches the monthly support zone, which will then probably give us a huge rejection, especially if the downtrend continues on the monthly time frame. And remember, guys, this works on every single time frame. So I mean, quick video, guys. We've covered structure, how to find how to determine where price is, what price is currently doing. Again, look, we've got a nice momentum line here. I just want to quickly draw that. I've taken you on a quick tour with the harmonics. Don't worry too much about the harmonics. you really just want to worry about support and these levels. Like I've shown you here, if we go out to the weekly, we can see here we've got a very clear order block, very clear breaks of structure here. And you can see again, look, price came up to this level where price stalled. And again, we've got another strong supply zone here again, where price again pushed it down. So you can see if we go on the daily time frame, we've got a strong again level of support here that broke structure. And when you reach a level that previously broke structure, 9 times out of 10 you're going to get some strong rejection from that. So you can see again, once price reached here, we had a big bullish push, but then we also on the lower time frames had a, it broke structure again to the downside, but then we rejected off the monthly support line and price absolutely skyrocketed from there. Stalled a little bit here because again we've had a little, if we zoom in on the lower time frames, we'll have probably an order block here or some form of support or resistance. And now price is currently filling this imbalance here on the daily. And when we go deep on this, we can really fine tune all of this, and I can show you how to trade basically inside all of these candles. Like if we go into the 1 hour, just really quickly, you can see obviously price is a lot choppier, but we can still see price is on a bullish trend. You can see where it broke structure before. But soon, coming up to this level here especially, we are going to be expecting a pullback before a continuation. So now you could buy, but it's not the best time to buy because we don't want to buy too high. We want to wait for some form of pullback and after rejection, and then buy up to the levels, obviously, that we spoke about on the higher time frames. So guys, I hope you enjoyed that quick video on structure and just a really basic level of how I mark up some charts. I have missed a fair bit off here, but it's just to give you guys a good idea, of how to take entries, what to look for, a little bit on the harmonic side, how to determine price action, how we use, strong support lines, etc. So any questions, guys, anything you want to say, post in the comments below, and I'll create the content for you guys. I'm here to provide you value. I'm here to provide you, stuff that other people don't like to teach or that charge millions of dollars for. And that's it, guys. I'm missing trading Forex like crazy over the Christmas week, so this was just an excuse for me to get on the charts. Have a super awesome fucking day, and yes, anything you need, guys, let me know. Post me a comment, do me a subscribe, and get in my free group, guys. Spread the love, share the love. I'm here to help people. That is my mission this year, to help as many people as possible become financially free using the Forex market. So have a good Christmas. Well, no, Christmas is finished. Have a good New Year, and I'll see you very soon.